Great episode for everyone today where we're going to conform to mainstream narratives and talk about why you should be bullish on the bear market as a builder. Disclaimer, this is not the Bankless podcast. Before we begin, let me just quickly introduce the Three Levers founders and the occasional contributors of mildly interesting talking points on this show. We've got TJ. Funny fact about TJ, he used to describe himself as a retired bond trader on Twitter, despite having worked in the credit markets for less than a full cycle. Fortunately, he's taken that out of his description. Unfortunately, his tweets have absorbed the cringiness. We've got Shake. Shake recently showed up late for a Twitter Space series we were hosting because he wanted to finish eating his pizza. And today he actually responded to a message in our Telegram group with, "Sorry, guys, I'm building the future of Web3." We'll maybe dive into that later today. And last but not least, we got Chris. Chris is maybe the most cringe Instagram poster I know. His stories consist of an awkwardly shaped boy human in a tank top holding a gallon jug of water and attempting to pose as a coder built bodybuilder, in oxymoron moron in of itself. Fellow humans, how are you guys doing today?
Good.
Great.
Awesome.
That was really good.
Thank you. That took me about 3 minutes. That's how cringe each of you guys are. So like we said at the beginning of the show, we're gonna talk about the bear market a little bit. Each of us, we work in crypto. We obviously are very invested in the space, and we think that there's a future for the space, despite all the negative sentiment and uncertainty. I think, as a lot of our listeners probably know, we're entering a pretty fraught macro environment, and with every bear market, I think there's a lot of unknowns, and that's dragging down on broader growth. It's scaring a lot of people from the space. And so we thought this would be a good episode to kind of just talk about how each of us are thinking about this bear market, what we're excited for, what we think the challenges are, and just other, broader observations. And so I think let's start with TJ. For those who don't know TJ and what he does outside of this, he works at MakerDAO, the biggest decentralized stablecoin, the biggest DeFi application by total value locked, and he also actually runs his own liquid fund. So TJ, I think from both the perspective of someone working in a DAO, and also from the perspective of someone who's talking to investors, and talking to people that maybe want to allocate capital to this space but aren't sure how they should be doing it. I'm curious, what are your discussions like today? How are you kind of talking to people about crypto, and what to be looking out for given the conditions of the market?
Yeah. So there's obviously a lot of FUD. Crypto's been pretty obliterated relative to traditional risk assets. Although I do want to note one quick thing. I think there is kind of this sanctimony from people who have not gotten into crypto. I don't know if you guys have gotten it, but they're like, how's it going in the bear market? Still doing well in crypto. And you're like, yep, just continuing to build because this is a fucking revolution. It's not just a frivolous asset class. But it's important to note that like a lot of these names, these traditional names, these equities, some equities have been obliterated 80-90%, right? Zoom, DocuSign. And so I don't think it's completely unique, although it is pretty obvious that being further out in the risk curve, crypto's been hit hard. So I think usually kind of what I suggest people consider is horizon, right? It's a little bit cliche, but if you kind of zoom out, day to day, month to month price action, I don't think it really matters to any of us, right? We're building for the long term. And even on the investment side, I am not a good trader, unlike many folks. I don't know what to do with momentum, price action, volume. It's not what I'm good at, so it's not what I do. I focus on long-term, fundamentally strong stories and invest and hold those names. And until something about the environment changes and invalidates those theses, I'm holding. And those that invest with me are bought into that thesis, right? And so I think it's just important to remind people, look, from the beginning, we both decided as partners that we're going to have this sort of frame on how we're allocating. Now, nothing has really changed. Many of the names are still fundamentally strong, right? And so until things change, we need to look 2, 3, 4 years out. I think it's key to remind people of horizon and scope and to zoom out. I think another thing that's been kind of humbling, but also important to confirm to folks that ask me is I think we've all really underestimated the extent to which crypto was correlated with the Fed balance sheet, right? I was ranting about a sort of divergence and sort of dispersion of assets, bonds, equities, crypto. They behave very differently. They haven't. So I think it's important to recognize that and to update our models accordingly. But then I think the final thing here is, the internet experienced a very, very similar episode, right? Dot-com bubble, stuff got crushed. And then what happened? Out the other side came some of the most valuable networks and companies that the world has ever seen, right? So if you're a long-term investor and the idea is from bottoms up to find strong names that will benefit from tailwinds and that will be able to sort of gain a moat and drive pricing power, nothing about that has changed. So I encourage people to look out there, do their own research, find the strong names that are going to be the Amazons and Googles of 2025.
I mean, I think very well said, and completely agree. I mean, I think one question that kind of brings up though is there's definitely fundamentally strong names, projects that have good moats, projects that have real life use cases, or projects that have really strong communities, right? But I think one thing we've also seen in this space is that innovation moves at a pace unlike anything I've really experienced. I mean, I'm sure other people who are early to, technology relevant revolutions have seen this type of stuff, but I myself haven't. And as an investor, I think it can be difficult to kind of recognize when things that you're invested are becoming outdated, right? Especially with how much is happening in the space right now. And so I'm curious if, from your perspective, how you kind of think about identifying what those next trends might be, or, what the investments that you currently hold, how to think about whether or not they've become, outdated.
That's a great question. And I think, I mentioned that the way I invest is very much bottoms up, but you make a good point, right? If you're bottoms up investor, there's limited time in the day. Do you really have the time to research each and every holding that you have, right? And at some point back in the day when the world was different, I had a lot of time to do so, right? But things have changed. How do you adapt those models? I think this is why being in the space building is so important, right? I've surrounded myself with people that are some of the smartest, kind of most informed, impressive builders in the space, right? And to some extent, you need to kind of use those people and their expertise as a proxy, right? You can't be a specialist at everything. Chris is working on derivatives. Shake is really deep in NFTs. You're more on the sort of trading institutional side. Each and every one of those angles is a very interesting way to gain an investment thesis. So, this is why I say for people that are not working in the space full time, that don't have the time, you should probably just hold like a nice big basket of blue chip stuff, sort of a la like an S&P ETF in your retirement account. But I think what's key is to get those names that are small, underreported, but are going to be huge in a year, 2, 3 years. I think you really do need to be building in the space 24/7 because other people will be passionate about names within their domains that they know more about. And at some point, you sort of do need to, export or I don't know, you need to consider their expertise as kind of gold, unless you have a better reason to think otherwise. I'm not an expert in that area. So if someone says, DYDX going to Cosmos is going to be revolutionary for derivatives, I will probably consider that, fairly truthful until I can invalidate it.
Yeah. Yeah.
You're
Well
like
said.
the one hyping up DYDX the most, though.
A
little self-expertise going on there, if you ask me.
Just an example.
Self-expertise. I like that. Yeah. Well, obviously, TJ's got huge Cosmos bags and is just shilling it shamelessly on this podcast.
Yeah, that reminds me, just quick disclaimer, not investment advice, only for educational purposes.
It's only investment advice if you want to lose money. So all right. So, I think well said, TJ, and thanks for kicking off like that. Chris, why don't we go to you? You're building a product, and that's extremely difficult in a bull market. I think just because everything is moving so fast, or actually, I think there's kind of trade-offs, right? In a bull market, you can probably get fundraising a lot easier, but the competition and the pace is relentless. Right now in this bear market, it's probably a little bit more difficult to get the fundraising you need to kind of build a sustainable long-term protocol. But it also gives you a time to maybe step back, reflect on some of the mistakes that you guys might have made during the first round of building, or also some of the places where you feel like you really need to double down. And so, I'm kind of curious, like when you sit down with your team and talk about kind of the protocol and what you guys are looking to do, how does the bear market influence those discussions?
Yeah, so I think two big things that stand out about the bear market. One, with respect to hiring, I think you see a lot more people kind of feeling the bear market and maybe even a little bit discouraged, or at least maybe not as confident to go do their own thing. And so in a bear market, it's actually a good time to try to find some other like-minded or talented people and kind of recruit them to work with you. Because when it's like a bull market, I'm sure Shay can talk about this in NFTs, but everyone thinks they can be making money and wants to do their own thing and kind of has almost like ADD and they can't pick anything. And what can make it really hard to find people that want to come work with you. And I think then when it shifts to the bear market, people that kind of goes away. People don't have the same security. So Drift's really thinking about, can we get really top notch people that are still excited about crypto, but maybe they can't do their own thing to come join and work with us and build for the long term. And I guess the second thing is um, during a bull market, there you just see everything going up, and there's so much pressure that you want to keep up, and you feel like you need to launch super quickly. And for Drift V1, we launched super quickly, and so we're definitely part of that. Then when you start moving to the bear market, kind of a lot of the hype is getting washed out. So you're like, oh well, maybe we can wait another couple weeks, to launch something, just because you don't feel that anxiety, and you can think like, well, I'm going to take a little more time to maybe add an extra feature that I wouldn't have added during a bull market. So I guess in that sense, you like start thinking a little bit longer term in a way. Not that you're not always thinking long term, but you feel that less of that pressure to like get this done right now, right? So,
Yeah.
for example, for V2, we're kind of going to thinking about, well, should there be a spot market in this exchange, right? And that adds more time to the dev life cycle, but at the same time, it's like, well, users would really like to have a spot market, so maybe we'll trade off V2 not being live as soon so that we can give something that we think more people will want to like and will eventually get more users. But it's really hard to do that in like the heart of the bull market when you're like, I need to be live right now, I'm going to get left behind. um and so I think that's affecting our psychology too. um
Have you
so
have you seen in terms of hiring, like I think one thing that I hear a lot is because like TJ was mentioning, like it's not like traditional equities, especially in the tech sector, are doing that well. And that as a result, there's not necessarily a brain drain. I think that's an exaggeration, but there's definitely a significant flow of talent from the Web 2 space to the Web 3 space, despite the fact that Web 3 is in such a bad place right now. Is that kind of sentiments you're seeing as well?
Um, it's tough. Like, I'm not sure about the Web 2 to Web 3 pipeline. I think given what we're doing, in a lot of ways, we want people that are more crypto native or have more background in finance, because we're building a DeFi protocol. So, like, I wouldn't, unless they were like a superstar Web 2 engineer, I'd prefer someone that's a bit more crypto native, because it's hard to get people up to speed on all the DeFi stuff. Maybe if you're building like an NFT or more social app, you're like, you want those Web 2 people. But for us, we don't want them as much. I think the big thing is like people don't feel like they can just like go and float around as much. I think people are looking for more security in terms of like a consistent job. And
Yeah.
so the talented people who are probably getting away with floating around more, and just posting on Twitter and whatnot, are probably more eager for work, which is
Yeah.
good. And I'm sure you'll just see, I'm sure it just happens every cycle, right? Next bull market, people have inflated wealth, and then they don't really want to work as hard. I guess that's another part. 3 is the general, just like, I guess, mood of the team is like very hungry, right? It seems very easy when it's at the top, right? Like Solana's at $260 and you're building on Solana. You're like, oh, wag me. Like, I just need to be live on Solana and I'm gonna make it. Now when Solana is like has these existential drops, you're like, well, I could build on Solana and Solana could not make it. And so then people need to be like, you could just see the like tension there. And so people feel like they need to work harder, because you don't know what's going to happen. And I think honestly, I really like that aspect of it. It brings like a more a deeper focus and like hunger. Than it was kind of annoying actually in the top of the bull market where like everyone thinks they're a genius. So
You heard it here first. If you work in Web 2 and want to work with Chris, don't bother applying. He's not accepting applications.
honestly, this whole idea that like Web 2 engineers are really good and then we need all of them, it's like if you're at a big company, like if you tell me you're working for Meta, like and you're 25, you're probably like an okay engineer, like you're basically a little cog in a big machine, right? Like if you were really good, you probably would have already quit, right?
Yeah.
So there's like people that are still there, especially after the big COVID great resign. If you're still at a FANG company, like you're probably not super I guess ambitious or autonomous in the same way. Like you're almost probably closer to like a lawyer or something.
You're
or a
taking
doctor.
my recruiting strategy, dude. You're nagging all the FANG engineers.
This is
exactly what I did to get Chris to help me on my NFT. I told him he didn't know NFTs.
This is 99th percentile violent for Chris. It sounds like my tweets.
Oh no. Okay, we won't make this the clip or maybe we should make this the clip. Overconfident DeFi
And tag
dev next
Tag
Web 2
Netflix.
engineers.
Yeah, tag Netflix, Meta, Google. No, I think that's a good point. I think that's an interesting point, and it's also different code, especially if you're building on Solana, right? I mean, it's not like an easy transition to make necessarily.
I'm kind of curious. I want to ask a little side tangential question. Like, what makes a good engineer?
I love it.
That's a good question. Well, I guess there's different types of good engineers. So there's people who are just like hyper specialized, where they're like great at UI or they're great at like infrastructure, etc. And then there's people like that are more, I guess, okay at a lot of things, but can help understand the overall how the system fits together. Like I think I'm more like my job is more the second one, where like I'm solid at a lot of things. And then I just have to make sure like everyone on the team is like contributing their parts. Whereas then there are people who are just like, they're just like god tier, like UI, and that's just what they focus on, and they don't know anything, I guess, on the back end. I think an overall skill for like if someone's a good engineer, if they're just like hardcore problem solver, where they're like, we need to figure this out, and then they just don't care if they've never solved a problem like it before. They just start breaking it down to what they do know and they figure out a solution. And that's actually probably the biggest thing is like, do you get anxious when you get a new problem? You're like, I can't solve this because I've never seen it solved. Or do you just like start thinking, okay, just start brainstorming and quickly figure out like how you can get an answer, even if it's a shitty answer?
I mean, I feel like at your protocol's stage of maturity, that quality, the ability to be excited and confident that you can solve a problem and then going and doing it, that's like the North Star for any startup hire, if you're going to boil it down, right?
Yeah, you want someone where you're just like, yeah, we have this problem, don't know how to do it, go figure it out. And then they're just like, yep, okay, easy, bang. And then they come back and they're like, it's way harder than you said it was, but this is the solution, I think great startups find people and hire those type of people.
Yeah, it's interesting because the X FANG thing is like really good for optics, but I think you have a good point that it doesn't certainly mean that they're going to be a good fit for a startup. And sometimes what you learn at bigger companies, no matter how prestigious they are, like actually hurt your skill set for working in like a really early stage startup.
Yeah, like they kind of like there's so many guardrails in Fang, right? And there's so much infrastructure that's built out for you that you actually don't have to deal with that much ambiguity a lot of the time. And so then when you go to a startup, you actually don't need sometimes a sophisticated systems, but you just need to stick a bunch of various parts together to get started. And so like losing all the guardrails of working for Google or Amazon, a lot of people then like they lose that structure and then they can't really perform that well.
Yeah, I mean, I'm a good example. I need structure to perform. That's where I excel most. I'm curious, like Shake, like what about you, man? So Cyber Samurai entering a bear market. And we talked about this on the podcast a little bit last week. Almost kind of like an inflection point in terms of Solana NFTs and maybe broader NFTs and the role of royalties for project owners. How is Cyber Samurai kind of looking at the bear market, and what are you guys trying? What are you focused on? Are you in survival mode, or are you in like innovation and build mode?
Man, I don't want to talk too long, but I mean, because I could just talk about this for so long because I think about it a lot. So I mean, for us as a company, I'd say we're really focused on creating ways to like creating things that can keep users' attention during a bear market. So like something that keeps users' attention during the bull market is like Ponzi schemes and yield farms, like making like, just to put it bluntly. And a lot of NFTs are like that, no, I don't say any names or anything, but like, so I've been thinking about what, like, no one's making money right now, but like people enjoy social experiences and like they enjoy, connecting with people through NFTs, right? Like making friends online, right? And it's like, what can we do to like encourage that? That's like fun and kind of competitive. So that's like kind of just very broadly what we've been working on. But with NFT project, I mean, this is kind of like true of any like probably any company really, but especially tech companies like outside of crypto. It's like you always want to be like if you're raising money as a tech startup, you're always like want to like hype up like the next thing, and like if you can sell a VC on like a dream of like we're gonna fucking change the world with this product, like you're gonna raise way more money than like if you're like, hey, we have this app that has like 2,000 weekly active users, and they're like, well, fuck this, it's like it brings it back down to earth. And NFTs are very similar. And so like I've kind of realized just me personally, my time like split up between like marketing versus product development. It's kind of like frustrating. Like I wish I could do product development more because it feels more like meaningful to me. But a lot of my like I'm realizing I have to focus more on marketing. And I think this is just true bull or bear. So this is where it could like differ from like DeFi projects. But like if people like don't care about your NFT project, like it so quickly like goes out of it loses mind share. And so yeah, that's kind of like just me personally. Like I'm realizing I have to focus more on marketing, but then like the products that we are developing are like just designed to like be, I guess this sounds super obvious. I was gonna say they're designed to be like sticky, but like something that people interact with like on a regular basis, as opposed to something that's like really innovative,
Yeah.
Yeah. So I see a lot of NFT projects trying to do that, like innovate and like, this is this real utility. And I don't really look at it like that. I'm like, yeah, this has utility, but it's just something that's like frictionless and like it's easy to convince people to want to use this thing,
Yeah. I think that makes a lot of sense. I mean, I'm curious, like, what about in terms of like competition? Like, how does competition look like in the NFT space right now? Right? There's two ways I could see it happening. On one end, it's like, a lot less projects are launching. So there's a lot more competition. It's easier for your project to stand out and just to like attract users. On the other side, I could see there's a lot less project launching. And so as a result, there's like a few safe haven blue chip NFTs that everyone wants to go to, and the rest are kind of being left in the dust. How are you kind of thinking about that?
Yeah, it's I definitely see some of the latter happening, and really like I forget if we talked about this the other week, but there's like probably 8 projects that on Solana, for talking about specifically Solana, there's probably like 8 projects that are taking the lion's share of the volume of just total NFT volume, is like in a very, it's like a power law distribution. And so I'm just trying to get us to be one of those projects, basically, which, yeah, I guess that's super obvious. But in terms of like the competition, so kind of, I did want to come on that too. Like, I liked what TJ and Chris had some really good points. And I think all of us, well, yeah, I don't think all of us started working in crypto like during a bull market, and even before we were working in it, like we were getting really interested in it during the like early stages of a bull market. And I've heard Kobe talk about this a lot. Like that's like super normal, because it's exciting when the numbers going up and you're just hearing more people talk about it, and it's just natural that like people come into crypto in a bull market. And then it's natural for the opposite to happen, like for people to leave in a bear market, because very few people are making money. It's not, there's not being talked about in the news. Like actually in the news, like especially with NFTs, people are mocking it. Like people are like, oh, like NFTs are like the dumbest thing that humanity's ever done and stuff. And like, so it's hard to like remember your conviction of it. But I think, like TJ said, like we all think that there's different types of like revolutions happening here. So we're sticking around. But yeah, in regards to the competition, so I tweeted about this last week, but like I thought NFTs were more scammy during the bull market than I do now, because it's really hard to get there's just a smaller pool of liquidity and a smaller base of users. And so you have to really compete to get those people's attention and money. And so projects are becoming more innovative. Whereas like when we minted, like you could pretty much mint any fucking dog shit you wanted and you would have sold out, like if I'm being honest, right? And yeah. So in that regard, it's a lot easier to find and connect with other founders who are like innovating and like bounce ideas off of each other, even though it's more competitive, but I've never been more excited. I guess the point I'm trying to get at, I've never been more excited about like how I see NFTs being used right now than before. So like I think, and I wasn't around when in like 2018, but I think it's kind of a similar pattern we're seeing. Like NFTs this cycle are like the ICOs of 2017, where they're just like unregistered securities, like selling you some hopium dream. And then like things come down to earth. Most of them go to zero, but then some kind of like figure out, okay, how is this going to be something new? And then that's what DeFi summer was kind of birthed out of, So I see the beginnings of that happening now, where people are really like stripping of like making money and like Ponzi schemes. Like, what are NFTs? And it's just been really cool to see like how people use the tech now. Like I said, I'm just super excited about the actual applications of it.
Another thing about these sorts of situations, right? It can even be more broad. But when a system experiences, or even an ecosystem, let's say, experiences a crisis, a forest fire, what tends to happen is like everything's been reshuffled, right? And so the next stage is when everything gets rebuilt in a way that will be very indicative of how things play out over years, right? And so when we're in these chaotic stages, all the excess energy that was around, that was in the ecosystem during the bull, a lot of that's been pulled out, right? And then resource allocators, whether it's a builder, an investor, someone allocating their attention or their time, become a lot more cynical. And so the really good quality stuff that sticks around, that continues to move the needle day by day, just making little improvements, it has this, those entities have this unique ability to accrue market share, right? Because they're still strong. They have an ability to seize territory in those moments. So one would think, whether it's NFTs or whether it's in DeFi, these situations are really good for a very few protocols or NFT projects. And they're really bad for most of the market, but that energy does get rechanneled into the empires of next year.
The empires of next year. I like it.
Oh, go ahead.
No, go ahead, Jake. Yeah.
Yeah, I think I like what you said, because I remember somebody told me this about markets, like trading markets or investing in markets, but like the time you could least imagine selling is like the time that, like, that's the top basically, right? Like when it feels like against all your like human nature to sell, like that's the top. When like you can't imagine selling, right? That's when you should sell the most. And then like vice versa, like when you can't imagine buying, like that's probably when you should buy. And it's interesting, I've been thinking about that with like your time too, because like TJ said, like I said, you're investing time and investing money. It's similar in a lot of ways, right? We could talk about the differences of investing versus entrepreneurship, but like at the end of the day, you're like giving up resources to do it. And so now is the time where it's like, if you're going to launch a DeFi project, like Chris was saying, it's easier to hire because most people are like, God, I cannot imagine trying to raise money right now. Like they can't. But like if you are, launching a project, like it's probably one of the better times to do it, because it's like it'll be easier to get attention. It'll be less noise. It'll be less rush. There's like a lot of reasons to do it. And then I was going to say one other thing. Oh, the other thing is like, I'm sure you guys could all relate, but like when it's the bull market, this is actually kind of the time money thing. But like at least me, I was making so much money, like flipping shit coins and stuff, like that it was really actually hard to get work done. Like if I'm being honest. And then now it's like, fuck, it's fucking dry out there. Like I'll take maybe one trade a week, like maybe. Most weeks I'm not even doing shit. And so it's so much easier to like get like deep into work and create things. Which is funny because on Twitter, like everyone asks the opposite. They're like, oh, like it's the bear market, but we're still building. And I always like say like, dude, this when it's fucking easy to work. Like, can you imagine I'm fucking, telegramming Chris, like he's trying to get shit done. And I'm like, bro, the D gods is minting, like that's fucking distracting. Right. So that's just like the nature of it. But I think that's also a reason why we're seeing more cool things being done now, because people actually have time to like get into a problem and like take their time with, a product.
Yeah. I think, I'm curious, like, I think what you guys are saying, it kind of touches on like, there was like the bull market is such a frenzy. I think like now is a good time to maybe step back and like evaluate what was accomplished over the past 2 years in the bull market, right? Like, I'm curious, do you guys have any views or thoughts on like, whether it's very granular down to like a specific project or something, but also more it's just the high level of like crypto, blockchains, Web3. What do you think were some of the major accomplishments that or strides that were taken in the past 2 years? Anyone have any thoughts initially?
I mean, I think one, and maybe it's hard to remember this in this current moment. Prices have been eviscerated. We've seen a lot of exploits, whether it's Ronin or Wormhole. We see Celsius, Nexo, Three Arrows, BlockFi getting obliterated, blah, 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 blah. But I do think, compared to when at least I really started to dig in and allocate significant portions of my net worth to the space, significant portions of my time, I mean, crypto's here now. It's been legitimized. You have people leaving JP Morgan to go work in crypto, right? And in 2020, before DeFi summer, that was just not happening, right? We've crossed a chasm. And I think you can look at a variety of little examples. We won't run through them all. But to me, there's that growth curve, an adoption curve, right? And once you trip a threshold, it's inevitable, right? The growth is inevitable. And I think we're beyond that threshold. So despite all the chaos that we see in the day-to-day, despite the prices and the Fed and this and that and the scams, it's here now and it's not going anywhere. And as long as the revolutionaries continue to build, the developers, the investors, whoever, this thing's here to stay. I think it will do for value what the internet did for information. To me, that's the clearest thing. Very vague, but the clearest thing that's happened over the last 2 years.
Yeah, I would agree with you. I think that's a huge accomplishment that maybe isn't underplayed. And I think that's partly a result of the fact that so many people who are in the space now, like, entered during this cycle, right? So like the fact that it continues to play a role in the mainstream media and that there's discussions about it to them is not surprising, because they're like, yeah, of course, like this is crypto. But, if you were here, and I wasn't, but I'm assuming if you were here 5, 6, 7 years ago, things went silent, right? And there was no discussion in the mainstream media about it. And so I think that's a great point. I think probably for myself, like the thing that I always come back to is that like the blockchains actually work, right? Like I think that's a huge accomplishment in of itself. And just the idea that like they continue to kind of fulfill like the objective of like operating in operating in an adversarial environment with a trustless party, right? And like we've now proven time and again that crypto and blockchains can do that, and it's just a matter of building products that have good product market fit on those blockchains. So like whenever anybody asks me now, because like TJ said at the beginning, a lot of people are kind of like, what are you going to do now? And I'm like, no, like this stuff is actually working. There's just a broader, macro environment that's dragging down a lot of the growth. And it's also just cyclical in nature. And it's it's a hyper capitalistic space, and there's not regulation. So the cycles are going to be a lot worse. And so that makes me, both a little apprehensive, obviously, because it means like, we have no idea how long this is going to last, but also really excited because we know that it works. And it's just a matter of figuring out like how best to kind of use it in the real world, if that makes sense.
Yeah, it does.
Yeah, and I mean, I will say though, I think I'm curious then if we flip the question around, right? Like, what didn't work, right? Like, where did we get a little bit ahead of our skis, right? Like, I think to myself, scalability. So I think like the main kind of like talking point for a while was that like suddenly ETH is becoming scalable and all these other blockchains that are super fast and cheap are coming online, right? And I think probably towards the end, like probably the last few months, we're actually starting to see that manifest and actually happen. But it didn't really happen until it was too late. And so I think like this whole scalability narrative was probably a little bit too early and is just now really starting to take hold. And we're actually starting to see like the concrete results of that. And then I think, TJ, you talked about the bridging and stuff. And I think, yeah, like interoperability is another narrative. Everyone's like, the blockchain crypto is going to be interoperable, right? And, in my mind, I'm like, yeah, it might be, but right now it's not, And so, you need to basically be operating on platforms where you think they provide enough value and have a big enough community for your project to succeed without that sort of interoperability in the short term. And so those are definitely though two areas that I'm going to be looking towards, in the coming years as kind of like, if we improve scalability, if we can improve interoperability, then we've taken a step forward from where we were today.
Definitely. I mean, I think another thing that, looking back on the last 2 years and asking yourself the question, what do we know does not work about this space? I mean, I think something that really got flushed out is that, recursive sort of reward user generation and token economics, that's not a product, right? It's like there was a lot of experimentation, which is great, right? I'm all for experimentation. DeFi Summer was a fascinating sociological experiment, right? To invest in, to try to go the
Olympus DAO, bro, new world reserve currency.
Yeah, Olympus DAO was incredible to watch, and that happened like 1,000 times across the space, right? It was just like this explosion of activity of people literally saying, "Wait, we can go to an environment where we can't be censored and spin up a money or an economic system out of thin air." I mean, unbelievable, right? But you realize that those systems were not sustainable, and I think it's because when you unwind all of the speculation and the hype, what's left? What's the morsel? And so often the case was that there was no morsel, right?
Yeah.
NFTs too. There was this proliferation of creative energy. Awesome, right? Artists were making good money. People were making interesting things. CryptoPunks came out of it. But then when you unwound the hype, which projects had enough of a cultural or religious core to continue on, right? Which would retain retention when the money was gone. And so I think, like, honestly, there have been so many mistakes, but it's been all very positive, right? It's an iterative process. We
Yeah.
realize now that something like DeFi, something as simple as over collateralized smart contract lending, that works. And that can
Yep.
bring money to someone anywhere in the world, right? But I think that was the main thing for me. That the Ponzi games are Ponzi games. It's not a product.
That doesn't mean the Ponzi games are not coming back, though. I have no doubt that Ponzi 3.0 is going to be an absolute, like, the type of financial engineering that people are going to come up with to like disguise Ponzi's in the next few years. I can't even imagine. I know Shake is going to be loving it, though.
Dude, this I've been wanting to bring this point up here. Let me show you guys this chart real quick.
Shake's
I'm
gonna
reminded
show
of
us the
when,
Invictus. Are you going to show us Invictus? Shake?
No. But I'm reminded of like when Kobe wrote that article about what is Web3, and he's like, bear cases, it's the ponzification of everything. That's what it reminds me of. But like, so this is the crypto total market cap. Let me show this better. There we go. Crypto total market cap. And like, so you can kind of see these like periods here. I'll put it at like a log scale, but like where, this is like the euphoria stage, right? And that's kind of right here as well. And that's why I said like it's fluff. It's actually really crazy. It came down exactly to where the all-time high is. But like to me, like this is progress, because and also this actually makes me super bullish, because the other thing is like during this period, there wasn't like this, at least as much of this like looming economic recession, that we have now. And so the fact that like crypto, like TJ said, you're stripping it of like all the fluff, and then it's like what's left, and what's left here is actually the max of what, like just in terms of dollars in it. And yes, there's a lot of inflation and other shit, but like in terms of like dollars that are still in there, it's actually at what it is now is at the same as what the max was back then. So like the highest of people's fucking expectations of what this stuff was worth back then, like euphoric, delusional expectations, is kind of where it is now, whatever, 4 or 5 years later. Which I think is like
Right.
it's kind of cool to just like see this visually. I hadn't actually looked at this chart in a while.
In other words, the previous speculative era's peak is now our floor.
Yeah,
Yeah.
exactly. Yeah, it's pretty cool.
I think you're asking like what's happened. I think, well, for one, if you actually go look at what was built, there's all these financial primitives that were built and open sourced, and now we understand at least how to build those. And there's like a blueprint for that. And if you look back the last cycle, I wasn't around, but I don't think those existed. And so there's a lot of things that are just slowly being built and experimented with. And the thing is, like, it's really hard for tech just to like make a huge leap, one day to the next. Just a lot of like trial and error and hard work. But with like credit cycles and leverage, right? Those can just like basically price in all future growth super fast. And so it's like the markets just get way ahead of themselves when there's access to so much leverage. I mean, arguably that happens in every market, right? Credit cycles, you price in growth, and then at some point the credit has to contract, and then everything goes back down. But I know that like there's devs that are just continually working on these things, figuring out new patterns, and slowly figuring out, like, thinking through how to scale blockchains, right? So for example, like Solana Summer, you see Serum working, you're like, wow, this is so cool. Like, we're gonna have all this crazy shit on chain because look at there's a central limit order book on chain. But then, like, as more people come on, they realize there's more issues than they thought, because you can't foresee everything, and now they're trying local fee markets, and they're doing
Yeah.
trying all these different things, because it's an iterative process, right? Like, can't just magically grow endlessly. If anything, it's a lot of little S curves, like over and over again, that create growth over time. But then, like, I feel like in crypto, people see something and then they just immediately are like, think it should be priced to the moon, and like the leverage enables it, right? So I don't know. The tech can't keep up with, like, I guess, the credit cycles in a lot of ways, and that's why we're gonna just keep having cyclical behavior, probably.
One more thing I want to note. We kind of hit on on the employment side of this. In other words, how do we see revolutionaries coming from the previous system to come work in crypto? And to some extent we do, right? Like Chris talked about how some web 2 folks are coming over, but you don't necessarily want them. And where's the new building energy coming from? And I think one piece to all this is, for a lot of these DeFi protocols that have found product market fit, these primitives that were born of the last cycle that are still around and they're still strong, Maker, Aave, Compound, Lido, whatever else. Like the bottleneck, or not a bottleneck, but we actually need more people kind of from traditional finance who have a grounding in financial reality and who have lived through cycles and who can bring that. It's wisdom, really, right? Crypto misses a lot of wisdom because there's a lot of young folks who have a lot of energy, they're first principles thinkers, and they want to build and they're excited, but they haven't seen a whole lot of patterns play out. And so they don't necessarily have that long body of knowledge to condense and to infuse kind of that knowledge into these new systems. So I actually think, in a sense, I see a lot of traditional finance people wanting to enter the space. And I don't know exactly why that is. I think they think there's something here, but I think the real trigger, and I hope this doesn't happen because it will be painful, but you saw it in 2008 too, right? People are willing to take way more risk on a career that they're actually passionate about when the economy tanks and they don't have that many alternatives, and they're not sitting on a cash cow, working at Citadel, making 550K a year before bonus, right? So I think to the extent we do see, a recession rear its head, and people start getting let off, they already are in tech. Like, those people are probably going to be hungry. They're going to be like, well, the next chapter of my life, where is it going to be? Am I trying to go back and do what I was doing? Or is this an opportunity for me to go contribute to this new space? And I think when that happens, you will see a rush of people come in. The other piece on the dev side, and Chris can speak to this more fully than I can, but it strikes me that the barriers for devs to come in are still pretty high, right? Sort of tooling, DevOps infrastructure. People still need to learn the languages, whether it's Go or Rust or Solidity. When all that stuff, and a lot of people are working on that infrastructure, right? Like, even at Kava, there are people building all of this infrastructure all the time. When that stuff becomes easy and you just have these on-ramps, all these training wheels everywhere, that's another huge barrier to entry that's been chopped down. So I think if either of those two things happen, and those are both kind of bear market things, building better infrastructure that allows for builders to come, and obviously bear market thing if employment goes the wrong direction. If either of those things happen, I think you'll see a new infusion of creative talent coming to the space also, which is not a bad thing.
Good Kava plug, TJ. I think one other component though that might also be important is trust, right? I think just from an outside observer, if you're looking at what's happening in the space, and maybe you're starting to get a little bit of tempted as Bitcoin hit 60K and you held back, and now you're looking at this space and you're probably thinking to yourself like, wow, I dodged a bullet. And then you read all the stuff that happens with Three Arrows Capital and Celsius, and unless you're really digging into that stuff, there's not a lot of nuance. There's not a lot of discussion of what's actually happening and why they collapse. And I think that there's a big breakdown in trust as a result. And so I think one of the big hurdles probably over the next few years is going to be rebuilding that trust and getting the credibility back to a lot of the industry that are doing legit things and are not scamming people or, doing very fraudulent financial practices. And that it's going to be tough, but I think it's something that crypto has managed to work through over time. And a big part of making that trust sustainable, right, is continuing to poke holes in things that are taken for granted or things that are just accepted to work because they work. Like 20% interest from Luna, right? Like, a lot of people view that as a negative for the industry, but I think it's a positive for the industry, right? Like, that's a big hole that needed to be poked. And until it wasn't, people were just going to blindly trust that. And now people are like, all right, I need to be a lot smarter about what I'm doing. I need to, do my own research, all that stuff. So I'm looking forward to building trust or rebuilding, not trust, credibility, I think, over the next few years. And I think, as we keep kind of like shaving off all the shit that's on this crypto, and hopefully we're shaving it to have like this very narrow, I don't know why I'm envisioning it as like a big pole, but it's turning into like a narrow pole that's very sturdy, I think,
I agree with that, and I actually think it is trust. Like, just because
Yeah.
we have this parlance, which is we're trying to minimize trust because humans are fallible and they may renege on contracts, so we'd prefer that to be executed autonomously by code. But it is trust because this is a human system. It's humans interacting with programs, right? And to your
Yeah.
point, one of the huge hurdles to mass adoption is all of these vulnerabilities, right? And things like Luna, right? Which is just that's an unsustainable system that's been exposed. But these vulnerabilities are no joke. I mean, we're talking about hundreds of millions of dollars of users' funds regularly leaving the system, right? So when you think about a user interacting with a protocol, it is trust. Like, think about something, I think Maker does this really well. It's been around for a very long time and it has a good track record of not screwing users, right?
Yeah.
It hasn't broken even on Black Thursday or whatever. The system worked. And so I think users ultimately need that history of execution and reputation in order to adapt any of these systems. And I think we're getting there. Like, if you show yourself through multiple cycles to be reliable, that's trust. That's trust.
Yeah.
And that trust is embedded in a brand. And that's why I think brands are so important.
Yeah, I think, that actually, we got to do a future episode on branding and crypto business development. I think that's a great point and a really interesting topic,
100%.
Something else I wanted to add into is while you guys were talking, I was looking this up, like the number. This is Ethereum active addresses, so obviously just one chain, and there's more. But like, again, this is kind of you could see parallels with that total market cap chart that I brought up. But like, this is the ICO craze, right? You had a ton of people having to hop on to buy these, unregistered securities and initial coin offerings, and then you saw kind of a similar blow off top, mid last year. But then like today, the user metrics are still pretty high, like all things considered. And it's kind of again, people aren't like in here printing money on Ponzi schemes right now, but there's this remaining leftover of almost 1 million active addresses who have stuck around and are using this stuff on a daily basis. Now, a lot of these, you could even say maybe 30% of these are bots or something, right? But like, there's people using blockchains every day, and it's not during these periods of manic speculation, which I think is cool because, again, you go back here and it's like this blow off top, and then it just dumps super hard. And this is amidst, again, a looming recession, and it's still a lot of people are using blockchains. Like, that's pretty crazy.
Yeah, I mean, that before you go, Lucas, I feel like that's one of the key things here too. Like, with all the noise in price action, there are a key just metrics you can look at to confirm incremental month by month progress, right? Active addresses, L1 developers. As long as those things continue to grow, in the long run, the market is efficient. It will converge on fundamentals at some point.
Yeah, I mean, we've been in this stage, right? Like, there's this, I can't remember what it's called, but there's this concept that you build infrastructure, right? And then you've built too much infrastructure and product needs to catch up with the infrastructure.
Right.
And then you build too much product and infrastructure needs to catch up with the product, right? And I think in crypto, that's especially relevant and just like very early still. So watching that kind of cycle play out over and over again, we're probably about to enter another phase where we see this incredible layers of infrastructure get built up. And then we're going to start seeing a ton of new products come out. And, we love DeFi, we love NFTs, but there's a lot of other cool stuff in the pipeline that's going to really blow a lot of people's minds once the infrastructure is in place and once you have the right teams building out those products. So this has been, I think, an awesome discussion. It's making me a little less bearish on the bear.
Real quick, too, just to revise what I said. So that was only Ethereum, which is actually I guess they're not even putting Ethereum on this chart, but like this was to be fair, this was during the market was more bullish, but like there's multiples more total people. You can assume that there's multiples more total people interacting with blockchains, because you have Binance Smart Chain, 3.6 million daily active addresses, and Solana was 3.7. I remember when this was going around. This was like a few months ago, I want to say, but yeah, it's just even more dramatic than I said. It's just people are going to where the fees are cheaper, and so Ethereum's actually not a great measure of that.
Bullish on Sol. We're all Sol Maxes here. All right. I think that was a good episode. I think that was fun discussion. Some good insights.
What about you, Lucas?
What about, it was from my comments.
What about you? How are you, like, talk a little bit about how you're positioning in a bear market?
How I'm positioning. So it's a good question, dude. I mean, I think my own view basically is, like I was talking about, is that we had basically some shortcomings that came up during this past bull cycle. Specifically, I think in terms of scalability and interoperability. And, just from a research perspective, like that's what I'm most interested in, looking at how that develops over the next few years. I think like looking into blockchain infrastructure and blockchain architecture and design, because there's still a lot of improvement that can be made there, is going to be really important for understanding how the space continues to develop. And so I'm really excited at looking at things like, Celestia. I think we're seeing like modularity versus like monolithic chains is like the big debate that's going on. And watching how that debate plays out over the next few years, for me, is like the most exciting thing I can think of. So I'm really excited to see how that debate turns out. I'm excited to see. I'm not like a maximalist on either side. I think there's merits, pros and cons to both types of designs. But I think it's like it's kind of like a fork in the road that we're seeing right now. And whereas maybe past bear cycles, there was kind of like really one sort of blockchain design that people looked at, mostly this monolithic thing. This modular aspect offers a really interesting and exciting opportunity to rethink what a blockchain is and how it operates. So I'm looking at that. And then I'm also looking at governance. I think governance is probably one of the most underappreciated aspects of actually running and operating a decentralized protocol, because it's just so difficult and a lot of people get pretty bored by it. But, if you think that any protocol is only as decentralized as its, most centralized component, I think for a lot of these protocols, governance is where that most centralized component is. And if you really want to talk to people about Web3 and crypto as a decentralized ecosystem, it's a huge issue that needs to be tackled. And there's not enough good solutions out right there. I am bullish on it overall. I mean, I think like Maker, I think Aave, I think Compound have made huge strides in just kind of advancing the discussion and the actual execution of governance. Just the fact that we've gone from a space where you needed a group of devs who had multi-sigs to basically execute votes that were happening, to where we now have on-chain governance, where you have actual governance smart contracts that will update and implement update protocols and implement new codes just based on the result of a vote, is awesome. But there's definitely huge issues with plutocracy. There's definitely problems with, needing to figure out how KYC factors into this whole thing. And I think like that. So I think governance and basically blockchain architecture are going to be the two things that I'm looking at really closely over the next few years, because if we can really chink away, chink away at the, ice or whatever the saying is, we can make some great strides and onboard users who aren't like, oh, I'm just using a Web 2 app on Web 3. They'll be like, oh yeah, this is actually something different. There's merits. Decentralization has a practical advantage. And that's when I think you really see growth pick up. That's when I think you see people get really excited. And that's when I think you see, attracting a lot of talent. So
what do you see as like I get that's a good point about the blockchain architecture, the KYC, other things. But what do you see as like the thing that they're coming here to do?
Like
more
in terms of
NFTs, or like, is there anything that you think?
Yeah,
like that's a use case that. Yeah,
that's a Great question. It's something like I even have in my notes right here. Like I'm like bullish on uncovering what hasn't been uncovered, right? Like we have DeFi and NFTs. What comes next? And yeah, it's embarrassing because I feel like I have this conversation with a lot of people, and they're like, "All right, so what's next?" And I really have no idea what is next. But I do think if you are able to build better blockchains, right? You can create things like app specific change. You can create better interoperability. You can make things more scalable, and that's the type of like base fundamental infrastructure that empowers people to create really powerful products. So I don't think DeFi is going anywhere. Like it's really actually, since
So kind of
talking to
like with that, what you're talking about, it's like, or maybe Chris brought this up, but like you feel like we need to have better infrastructure, and then that will enable more innovation as opposed to like some killer innovation that then the infrastructure has to catch up with. Or I guess it's kind of both. Do you think that already happened? Like, do you feel like DeFi and NFTs is already like such a huge, like there's such a huge TAM for DeFi and NFTs that like we just need to scale better?
I mean, partly it's a tough question. I think, like I think we already saw it kind of play out, right? Like we saw basically that there was a huge congestion on Ethereum for DeFi and NFTs, right? And basically people were fighting for block space. And so like then we built out other infrastructure, Solana, Cosmos, stuff like that. And that attracted new users. That helped, like drive more growth and innovation. So I think we saw maybe to a degree in this past cycle that dynamic kind of play out. And I think, yeah, exactly. We're going to see it play out again in this next cycle. But I will say, like I'm only talking about governance so much because it's like something I've had to be researching for work a lot recently, and it's been really interesting digging into it because it's such an underappreciated aspect of how a lot of these protocols work and like whether or not they actually are like decentralized to some extent. And I think especially as like regulation becomes a bigger issue, and as you just have more just smarter people are coming into the space, and as a result they're going below the surface where the stupider people aren't, right? And so it's raising a lot more difficult questions, and I think governance is going to be one of those really difficult questions. And it's going to be, governance isn't something that we figured out in the real world either, right? So it's not like just having a blockchain is going to be a silver bullet for that. If anything, it's probably more difficult to do on the blockchain. And so hopefully it's something where we see incredible innovation, and it's something where like what would make me super bullish on crypto is if we get to a place where ideas from crypto are like leaking into the real world, right? Like where you see that dynamic flip. Just like Maker right now is like Maker for the past few years, people have used Maker to extract yield from crypto, right? They leverage up with DAI and they take out as much yield as they can. And Maker right now is saying, let's flip that dynamic, right? Let's take yield from the real world and drag it into crypto. And so I think like if we can start seeing right, just like on crypto right now, where we're seeing ideas from the real world being dragged into crypto and just kind of like applied, it would be really exciting to start seeing ideas from crypto get dragged into the real world.
I think we have our thumbnail clip.
That was fucking, bro. That was really well said. Yeah. I'm reminded too of, we didn't talk about it at all, but SBF wrote this thread kind of about this, where it's like, what are the use cases for crypto, and I thought it's a really good thread. And I know for me personally, I need to constantly be reminded of that. But like when, to your last point about like, what can we see crypto concepts come into the real world? That's what I'm really excited about with NFTs, like what are the applications of how NFTs could be used in like e-commerce or customer loyalty or gaming, like and like what problems do they solve? Because a lot of crypto is just making up a problem to solve,
Yeah, definitely.
But
yeah,
I think we're getting close there. Oh, you said you gotta hop off. Well, we can wrap up then. Anybody want to say a little summary, conclusion?
I think it was a good chat. I mean, I think we kept it from being too cringe. So, nice work. And I think it's exciting. Like I gotta say, like this is kind of like an ad hoc panel that we pulled together with us for, but like I think we all bring cool perspectives, and like, it's going to be really interesting to come back to this discussion in like, you know, maybe it's 20 years, maybe it's 10 hours from now when the bull market starts again, and, you know, see where we were right and where we were wrong.
Yeah, it's been enjoyable. It's a good panel. I mean, I hope it gets a bit more toxic, but we'll get there, you know.
To anyone listening and made it this far, just embrace the cringe.
Embrace the cringe. All right, that was awesome. Thanks, guys. Thanks to our listeners. We'll see you guys next week.